There's no follow-up to that.
There's so much to say. People are freaking out, but I can tell you 580 is tough to get. I could go on about it forever.
Hi friends, I am here with Nikki with Unity Home Loans, and we are excited to share and answer some of the most frequently asked questions in the mortgage industry and to learn more about what it takes to buy a home. Here's Nikki. If you wouldn't mind telling us a little bit about yourself, how long you've been doing this for, and just, for us to get to know you better.
Yeah, thanks, Tamily. Hi, I'm Nikki Taylor with Unity Home Loans, and I've been in the mortgage business since 2012. I transitioned from multiple jobs in customer service and thought this would be the next best fit for me to learn something new. I instantly loved it and never looked back. So I've been a licensed loan officer since 2012 and have helped, not thousands, but hundreds of homeowners over the years. I love what I do. I work for a broker now, so we have many products that can help your clients, whether they're first-time clients as homebuyers, or if they're experienced and they're investors, or maybe someone that would like to move up or move down in buying their home.
Awesome. Yeah. I love it. And you got some experience with you, so you've seen all the different markets that we've had in the last couple of years, the big rush, the lull, and everything. And I love working with Nikki. She's an amazing communicator, really explains the process super thorough with all of our buyers that partner with her. And I'm excited to dive into some of these frequently asked questions.
What loan programs are available for first-time homebuyers?
So for first-time homebuyers, there's a lot of options actually. Depending on what your credit score is and your income levels, I have several options for conventional loans or FHA loans. I also have different down payment options, and those also depend on credit score and income levels. So I have a lot available. It would just be a case-by-case kind of basis that I would love to talk to you about.
Which is great, because if you are looking for some assistance, there's some options for you just to make it really affordable so that you can get into your first home. And another popular question is, how much should we save for our down payment?
So that varies. We have loan programs that are zero down, up to 20% down, or even more if you'd like to put more down on your home. Just depends on your situation, and I'm happy to go over multiple programs that we have. For instance, if you're looking for zero down, we have an FHA zero down payment program. A VA loan is 0% down. And then we have a conventional loan that would be 3% down as the minimum as a first-time home buyer. Now, as I said, that varies depending on how much cash you do have saved up. And I can work with you if you tell me exactly how much you have, how much we need to put down, plus cover closing costs, all with that amount that you tell me is in your budget. I can also say that if you do less than 20% down, you will have mortgage insurance, unless you do a VA loan. That loan does not have mortgage insurance, but you do have to be a veteran and qualify for that one. But anything greater than 20% down, no mortgage insurance is attached to your monthly payment.
That's awesome. And now to one of my most favorite questions. What's the difference between a pre-qual and a pre-approval, and what is the benefit to either?
Great question, Tamily. So a pre-qualification is when you talk to a lender. Sometimes you do an application for them, and then they pull in all of your information. Basically, they're just taking what you put on the application and analyzing that data, going through it directly with you to make sure that your inputs were correct, and then saying, okay, you're pre-qualified for X amount. Now, a pre-approval is definitely what you want to do. This is what your real estate agent is definitely going to want a pre-approval before they're willing to take you out to look at homes. So a pre-approval, kind of the same process. You do an online application. The lender, the loan officer, which would be me, I analyze all the data. I give you a call. We go over everything, but I also want all of your documents. So I need to be sure that what you stated is correct. So I want to see your pay stubs. I want to see your bank statements. Pull a credit report just to analyze that and make sure that you are in a good position to purchase the home. At that point, once I have all of your documentation and your complete application, I will issue a pre-approval letter to you and to Tamily, and that says, okay, my buyer is ready to go out and shop for homes.
I love that answer and how thorough it was. And not that we don't want to take you out and look at homes, but we really want to put you in a position of power. And we want to make sure that when you do go out and look at homes that you fall in love, that you're in a position where you can write an offer that's going to be backed and definitely take you to closing. The worst thing that we could set you up for failure by not making sure that you're pre-approved, so that we don't have any hiccups along the way, and that when you do fall in love with that home and you're ready to move and write that offer, that you're basically going to get it accepted and all your ducks are lined up in a row. So that's the importance of why we highly recommend that you do have a pre-approval before we start the shopping process.
Correct. And when you speak to a lender, we ask a lot of questions. So if there's anything going on in your credit report that maybe you're not sure about that happened, that does come up sometimes. You don't realize maybe there's some collections on there, or you were an authorized user, say on someone else's credit card, and that's pulling in some numbers that you didn't know were there. Then we can help ratify that so that you're in a good position.
And that's exactly what we want for you, to be in a good position so you can move forward. Another great question is credit scores. How does my credit score impact my home loan and interest rates?
So it really impacts it. What we do when we pull a credit report, we want to look at your credit profile, and we pull from all 3 credit bureaus, from TransUnion, Equifax, and Experian. We take the middle score. So what we're looking for on a conventional loan, the middle score needs to be at least a 620. And on an FHA, we can go down to 580. That is the bare minimum. And you don't want your score that low. It's a possibility to get an approval, but it's a lot tougher, I'll tell you that. So the higher the credit score, the better. 620 for conventional. If you want to do a down payment assistance program, you need to be in the 640 to 660 range as a minimum.
That's awesome. And just a follow-up question, because I know that sometimes I get this question asked, that the higher your credit score, it's almost like a tier level service, that if you're in between this bracket, then your interest rate could be lower depending if you're higher than those minimum 620, 640.
Correct. So the higher credit score, it usually goes in about 20-point increments. So the higher the credit score, the better the interest rate. It's going to be a lower interest rate versus, say, if you have a 740 credit score versus somebody with, say, a 680, you're in the 700s, you're going to have a much better interest rate. So it really helps your payment, because the interest rate affects your monthly payment. That means your higher credit score, you're going to have a lower monthly payment.
And we all want that.
Yes.
All right, story time. I have a buyer that's pre-approved, and they want to know, what is their timeline on getting approved? And
okay, so once they're pre-approved, then you're going to go show them homes. You're going to put an offer in on a home that they love. Once that's accepted, we can close in as little as 3 weeks. Just depends on what the seller and the buyer agree to.
Awesome. So if we need to get something done, done quick, 3 weeks, or if we need to negotiate for more time, at least we have some guidelines of how fast we can move.
Yes, correct. And that's for any loan type that we do, 3 weeks, and even we've done some in a couple weeks, just if we can move quickly. So
yeah, that's awesome.
We can do short closings, absolutely.
Thank you. And that is super great, especially when you're in a competing offer situation, that line item, as far as like getting a quick close time, can make your offer swing to get accepted when you're in a multiple offer situation. So having a lender that can close quickly is definitely to your advantage.
Yes, and that's another reason why when we do a pre-approval, we collect all of your documents right away. Sometimes buyers feel like it's kind of a hassle up front, but if I already have your pay stubs, your W-2s, your bank statements, then I have everything I need, so that when you do go under contract, it gets submitted to underwriting and we're ready to go from that point on. It's very quick. That's why.
I love it. And speaking of underwriters, because a lot of times people have this like vision in their head that they're locked up in a dungeon somewhere. How important is it to understand like the relationship with the underwriters and how close they are if they're local, and how important it is to work with a local lender that knows the market, but has a team that can help and assist?
Yes, so we have a team that we work with directly, and they're amazing. We have constant communication, which is great. We don't have the underwriters, as you mentioned, that are scared and they're hiding behind their desks that no one can get a hold of. We can easily chat with them through computer. We can call them and they get back to us immediately, because you have to understand also, so they're working for a lender. They want to get your loan closed just as much as we do. So we all work together as a team to get our goal of buying your first home or your second home, whatever it may be, quickly and efficiently.
Awesome. You spoke about this earlier, and just a little bit of more clarity with mortgage insurance, which sometimes is typically known as PMI. Can you help define that, and when is that due, or what loan would that apply to?
Sure. So that's going to apply to any loan when you're putting less than 20% down. It's going to vary. So it varies depending, again, on your credit score, what your debt to income ratio is. All of the numbers within your loan profile determine basically what the PMI is going to be. And I will tell you that different lenders have different private mortgage insurance, PMI loan companies, or companies that they work with that gives them different rates too. So not every lender is going to have exactly the same rate on that on a conventional loan. The number may vary slightly, but we do our best to get you the lowest rate possible for that. It's included in your loan payment, your mortgage payment each month, so it's not a separate payment that they have to make. It's all one payment.
Awesome.
Now for FHA, it's a standard amount. So in an FHA loan, it's just a standard amount that's always going to be on the loan.
And just to really dig deep on that, the difference between the two, since on the FHA is a standard amount for the life of the loan versus a conventional where if you get into a certain amount of equity, that it can fall off. So can you give us a little bit of explanation on when does it stay for the life of the loan and when could it possibly fall off?
Yep. So FHA, if you do 3.5% down, which is their minimum, it stays for the life of the loan. If you do more down, then there's different ranges. So it can stay 11 years or for the life of the loan, depending on your down payment. FHA loan also, if you end up needing an FHA loan, even though you're doing 20% down, you have mortgage insurance for the life of the loan. There's no option to not have mortgage insurance on an FHA loan.
And then for conventional?
And for conventional, so your mortgage insurance is going to vary depending on if you're putting 3% or say 19% down. Obviously, the more you put down, your mortgage insurance is going to be a lower amount per month. But that does stay on the loan until you have 20% equity in the home.
Awesome.
If you put less than 20%.
And does that mean that you would have to refinance on an FHA to get the mortgage insurance off?
Yes. So on an FHA loan, you would refinance, if possible, into conventional loan once you have 20% equity in the home, and that would not have any mortgage insurance attached to it.
Does that mean you have to refinance for a conventional as well?
So conventional, you do not. Typically, the lender will just require an appraisal on your property to make sure that you have that equity of 20%, and then it will drop off. You request that from the lender directly. Now, if you're making your regularly scheduled payments on a conventional loan and you automatically hit that, it's a 78 to 80% loan to value, so about 20% equity basically, it's going to automatically fall off. You don't have to request it being dropped by the lender. They have your payment schedule and they see when that loan amount gets to having enough equity versus the purchase price.
Thank you so much for explaining.
So it's a little confusing.
Yeah, and a lot of this is a great question because again, like depending on the loan program that you pursue, these are different options down the road that you need to be aware of.
Right.
Well, thank you so much for all of your help today. This has been super insightful, and if you could let us know where we can find you, and if you have any questions or need some one-on-one time to see what's your next move, call Nikki.
Yep. So my direct line is 614-747-6149. My email is Nikkie, Nikkie, @unityhomeloans.com.
Awesome. Thank you so much
for thank you
today. Now you know the real deal behind mortgages, and that's just the warm-up. Next time, we're talking about something that every buyer wants to know, but no one explains properly. First-time home buyer programs, grants, and how interest rates actually impact your wallet. So if you're serious about getting into a home without getting screwed by bad advice, hit subscribe, turn on notifications, and drop a comment. Feel free to reach out with any questions.